Good afternoon, everyone. It's straight up 1 o'clock in the afternoon on a beautiful sunny day here in Northern California. My name's Wendy Roberts. I'm a CPA and CEO of North Star Strategic Partners. And we're going to be talking about taking your profits first, transforming your business into a money making machine. Okay, this is a little bit about my background. I started North Star because I wanted to be able to help small business owners achieve the success that I saw in corporate America. And I created a company with what I would call 4 points of focus. It's a concept to help you build not just a good company, but a great one. So, as I mentioned, I'm a CPA and a startup CFO. I am the CEO of North Star Strategic Partners, and I am a former corporate finance executive. I love to do speaking engagements and talk about financial as well as operational things and really how to make your company stronger, better, and sustainable. I'm originally from the Midwest, and as you can see there in the picture, I like to cycle in the Bay Area. Great. So our learning objectives. Now we're focusing today on construction companies, but this could really apply to any organization, small, medium sized, etc. So the first is we're going to talk about the concept of profit first, gaining an understanding of what it is. The second, we're going to talk about key takeaways as a business owner. And then the third, we're going to talk about how to get started. Okay, as all of you know, running a small business is not without frustrations. It happens. It's life. That's the way it is. But we are a certain breed being business owners. We understand that we're going to have those challenges and we're up to that challenge. One of the things that I think that kind of looks at construction companies and the trades and related fields such as interior design, architecture, any occupation that has project based circumstances, right? Or job circumstances. And that is, do you know your gross profit margin by job and overall? If the answer to that question is no, I do not, then you and I need to have a discussion because we can help you figure that out. The second thing that many construction companies have, and that is cash flow issues. And the reason is because we don't have a steady stream of revenue like you do in a subscription based company. The income goes up and down based on your jobs. And so, therefore, you have to properly manage the cash flow so you can pay your vendors, your subcontractors, and then run your business. So, cash flow is probably the most important thing in any business. So, the whole discussion we have today will apply to any company, but I'm focused on construction today because it does have its own unique challenges. And you might say, oh, I don't have enough money to cover the next job, or I don't have enough money for a rainy day, or I don't have money to pay my taxes. If you answered yes to any of these questions, this webinar is for you. Now, ponder this. What if you could say, I want to take my company, it's a cash eating monster, and I want to make it a money making machine? We're going to get into that because if you answer yes, I want to make it a money making machine, well, then we're going to talk to you about profit first. So, what is profit first? It is a behaviorally based, notice the word behavior based management system. It enables you to run your company by looking at the cash balances and determining how healthy it is. Therefore, when you know what's in your cash, you can be reactive more appropriately, becoming proactive. And so it forces you to be more frugal. It might also bring in some industry, changing innovation, such as job costing or project costing. It'll make you much more efficient in how you run your business. And here's a very key important factor. This last bullet, there are 8 critical factors that a buyer will look at when they want to acquire a company. At some point in time, you are going to exit your business. It will happen, hopefully for retirement, but there are other circumstances. But you will exit your business at some point in time, and you need to plan for that. Cash flow is one of those 8 critical factors. So look at this bullet point, number 3. Having a small to medium sized business that has consistent profits is worth much more in valuation and in terms of multiples when you're ready to sell than a larger company that struggles to sustain itself. In other words, it's not making a profit. So think about that. If I can get multiples for my business when I'm ready to retire and move on to the next chapter in my life, I would hope you would say, yes, I want to do that. Profit First helps you achieve that. Okay, so let's look at the formula. As we all know in accounting, I reminded you I'm a CPA. We were all taught in the profit and loss statement, or what's also known as the income statement, sales minus expenses equal profit, or net profit. But in Profit First, we reverse that. We take our profits first. So it's sales minus profit equal expenses. So in the first formula, it was like net profit is an afterthought. In the second formula, sales minus profit equal expenses. The expenses come later. The profits come first, go into your pocket, or pay for the expenses that you need, such as taxes. It's a cash management system that's designed to be more cost effective. You'll be more frugal. It also is easier to put money into your pocket. And we do that by creating what I call little small buckets, plates, some people call them envelopes. It's a way to differentiate and compartmentalize how you're going to be running your company. And the secret sauce of that is knowing what your allocation percentages are. How much do I put in each one of those buckets? And we use the tool, a Profit First assessment tool, and some other tools to get to that equation for you. Now, it's relatively easy once you determine what your percentages are. So in step 1, you're going to figure out what your profit should be. And we're going to show you how to calculate what's termed real profit or real revenue. So step 1, determining what your profit should be and what are those percentages. Step number 2, we want to set up those separate bank accounts or those separate buckets that we talked about earlier and compartmentalize them. By step number 3, removing the temptation to go into your celebration fund or your tax fund and take money out of it. We want to remove that temptation and focus strictly on running the business with our operating account. And then step 4 is probably the hardest part, and that is implementation. Being consistent when you're going to do it, plan it out that way. So we'll get into each one of these steps here very specifically. Okay, step number 1, as I mentioned, you have to look at an allocation. What are my percentages? And again, we use the Profit First tool and some other tools that we have within the company here at North Star to calculate what those percentages will be. Now, as I mentioned, real revenue is really important. So you'll notice here on this graph, the left-hand side, it's real revenue. And you might say, what is that? Well, you haven't heard of that before. Well, the formula is essentially gross profit, but I'll give it to you in a different way. It's gross revenue minus the materials and supplies that you use to build that residential unit, minus your subcontractors. So think about it, any of the expenses in your business that is driving that revenue, you want to take that out. And what is left over is the real revenue. That's what is really making the money for your company after you take out those expenses. What we might term cost of goods sold, but it's not just cost of goods sold. There's other things that go into that calculation. But For ease of discussion here, just think of real revenue somewhat equates to gross profit. That's why I mentioned to you it's very important for you as a contractor to know what is your gross profit margin per job and per in total. So let's use this example. We got circle here in D, a red circle. And let's say that the real revenue is between 1 and 5 million. And you'll notice that real revenue is 100%. Now, taking your financial statement, specifically your profit and loss, but to some degree your balance sheet as well. And I'm going to put it into the Profit First tool and a couple other tools that we use. I came up with these percentages. Percent to profit, 10% to owner's pay, 15% to tax, and 65% to operating expense. Now, I think when you guys take a look at, we actually sent out this Profit First worksheet. If you haven't gotten it, we'll resend it to you. Please put it in the chat or in the question and answer if you'd like to receive a copy of this. But it runs you through this methodology that I just spoke to you about. That's the income. What is the income? You can see it here. It's a little small, but it says income. What's your gross income? Subtract your materials, subcontractors, etc. And that will determine your real revenue. So you can use this tool to go through it. Now, you won't have the necessarily profit first allocation percentages, but you'll get an idea. And then we can help you go through that. Right. Now let's talk about when we're talking about Schedule D or the item there in D. On the left-hand side, you will see that that's the current situation. We have 85% allocated to operating expense and other small percentages elsewhere. And then on the right-hand side, we see what an 8-quarter projection will be. Now, remember, when we do Profit First, we're not saying take all those expenses and take all these percentages and do it right now and it's one and done. No, that's not how it works. We have to gradually use Profit First over a period of time. It could be 4 quarters, it could be 6 quarters, it could be 8 quarters. In this example, we're saying 8. So that's roughly 2 years. So we said, okay, I'm going to go from the 85% I have currently now to 65%, and I'm going to do it over an 8-quarter period. This makes it much easier for you to be able to sustain how to use this tool and to sustain profitability and to sustain your cash flow. So if you notice, we go 65% operating expense. We then put 10% to our profit account, or what I like to call a celebration fund. The next 10% is for the profit that's paying yourself first, salary, distribution, whatever the case may be, how you want to pay yourself. That's that 10%. Then the 15% is to pay for your taxes, both state and federal. Now, I know we broadcast all over the United States, and every state has different taxing authorities. You know, Texas and Florida, they don't have an income tax, but here in California, we have an income tax. So I also give you a little tip here. If you have money left over in your tax account, after you do your allocation, you pay your taxes, then you can distribute that to your profit account or to your owner's pay account. There's nothing wrong with that. Or you can leave it in the tax account for next year. But the point is, if you properly manage your taxes over a period of time and your CPA or tax person does quarterly planning for you, and I hope they do. If they don't, please ask them to do that. This is a service that we offer. I've done it throughout my entire career as a CPA in public accounting, as well as a consultant today. Tax planning is so very important. Then you level out the cash so that at the end of the year, you don't have to come up with $50,000 or $100,000. At the end of the year, or April 15th, in this example, 2023 for 2022 taxes, $100,000 is a lot of money that's going to drain a substantial amount of cash to your company. So once we determine those allocations, Then we go into step two. Okay, so step two, we set up those separate accounts. What I mean is you set up separate accounts at a bank. And please choose a bank, do your shopping. Choose a bank that's going to be fair to you on service fees, right? You just should not have to pay service fees for 5 different accounts. So we want to set up the income account. Okay, so that's where the deposits come in. The second is your profit account, or what I call the celebration fund. The third account is your owner's pay. The fourth is your taxes, which I just talked about earlier, just a few minutes ago. And then the last one, and notice the last one is operating expense. That's where you pay all your other expenses. Okay, so think about the percentage we just talked about. 10% for profit, 10% for owner's pay, 15% for tax, 65% for operating expense. So that will be your allocation. Now, as I mentioned, you want to eliminate the temptation. It's really easy to do electronic funds transfer, as we all know today. It was a little bit harder before then, but today, easily do it on your phone. Easy, easy. So you want to eliminate that temptation. Put it in a different bank account or put it into a savings account where it's harder. A savings account for your taxes, have a savings account for your profit first account. The idea is to not make it so easy to transfer those funds because you kind of want to forget about it. And if you're good at compartmentalizing, then that'll be easy for you. But if you're not, remove that temptation. Make it harder for you to transfer funds. Okay, and then the last step is once we determine those allocations, then we wanted to distribute them. And I'm going to say that you do it at least once a month. Don't wait for a quarter. Do it once a month, do it twice a month. Distribute those funds, right? Based on our percentages in this example, 10, 10, 15, and 65. Distribute those and then pay your bills out of your operating expense. Pay your salary. Pay whatever your taxes for your quarter is due. Pay them out. And why I say that is because the more consistent you are, and you can do this on the 10th or the 25th, you could do it on the 25th. We have different customers doing, different allocations and distributions. Some choose twice a month, some choose once a month. But I always encourage them to do it at least once a month. Be consistent and don't wait for the end of a quarter. Okay, so now that you know how to do it, let's talk about some success stories here. Okay, the first one is a professional service company. They started working with us about 10 months ago. And within that 10-month period, they accumulated over $100,000 in their celebration fund. Over $100,000. Now that was in addition to increasing their pay and putting a money away during the month for those quarterly payments. Before, they were waiting till the end of the year, or actually when they filed their tax returns the following year in April, to pay the taxes. You can imagine what kind of stress that put on them, be able to have to come up with that money to pay the tax in April. Just think if you could eliminate that stress and not having to worry about paying your taxes. You already have it. So you just distribute on a quarterly basis and pay your quarterly payments. The next one is an actual quote from a customer that has been working with us. And you can read that. She's been working with us probably a little over a year now. We've been able to really turn around her company, and now she's very successful. Incredible returns that she's getting on her net profit margin, as well as she implemented Profit First, and she's just killing it. All right, then the next slide. Let's talk about some of the things that you might come across. Right, debt is one of those. We talk about struggling with cash flow. So how do you address that? Should you not pay your debt? No, you need to pay down your debt. So we would allocate those allocation percentages that we talked about. We would work with you to kind of tweak those so you're still paying down your debt and still doing your profit first. Paying down your debt is very important because once you get it down, once you get the debt paid off, then you are really moving on your profit first account, your celebration fund. You may not even need any kind of loan in the future because you are so diligent and consistent how you are making your profit first work for you. So if you do run into a stumbling block, what is it? When do you start? When should I start profit first? How about today? Why are you waiting? What's what's waiting? Why are you hesitating to not start profit first? Remember this, always, always, always take your profits first. You work hard for your company. You work hard for your family. Why not treat yourself the best that you can and pay yourself first? Then pay everybody else. So, bank balance accounting does work. We have seen our customers fulfill expectations, such as the 401k, or being able to save and buy commercial real estate property for their particular company and then sublet to others so that that mortgage is being paid by their tenants. So if you think about it, that's a great way of building wealth, not only currently, but in the long term. When you're ready to step away from your company, you might sell your company, keep your real estate, have that as monthly income. And real estate, as we all know, usually appreciates in value. It's a great way to be able to pass that on to your children if you so choose. So remember the formula. It's not sales minus expenses equal profit or net profit. That's the afterthought, right? The formula is sales minus profit. That's why it's in red to point it out. Profit. Take your profits first. Equal what's left over, your expenses to be paid. So here's another success story. This is on a distribution company. They started working with us, I would say probably maybe about 2.5 years ago. You can see his quote here. We actually looked at things such as the financial statements. He really didn't have an understanding about financial statements at the time we started working with them. Now he does. We went over KPIs, which is key performance indicators, helping him run his business more efficiently, operationally. And I actually worked with him on his business. We went from 800,000 to $3 million in that 2.5 year period. 800,000 to 3 million. He is quite profitable today and a profit first advocate. So, if you are interested in what kind of industries that we work in, I do see a question just popped up. We do work with construction companies, obviously, as well as the trades, interior designers, architects, anybody that has project based. It can be also software companies. So we do work with software companies. We work with professional service firms like attorneys, doctors, dentists, others like that. And we also like to work with franchises as well as family-owned businesses. So I think we have a slide how they can contact me. So if you can go to that slide, we'll go to any questions and answers. There's my information. I'm more than happy to talk to you. I give a free complimentary 30-minute talk with you. Tell me, what are your challenges? Let us help you figure out how to address your pain points. Every single owner of a business has an opportunity to improve it. That's the reason why I started North Star, because I believe every company has the right to find their North Star or their Polaris, and not just be a good company, but a great one. And we've got tools like Profit First to help you achieve those goals. We actually partner with you on that journey. That's why I named it North Star Strategic Partners. North Star being your Polaris, strategic, implementing our 4 points of focus, which you see down in the logo there. Part of that is the profit first. And last, there's being we partner with you on that journey. So I see that we have lots of questions coming through. Let me address them. Okay, so on the tax allocation, So the question is, why is tax allocation 15%? It seems really high. The answer is yes, it could seem really high depending on what state you live in, right? Like I mentioned before, Texas has no income tax, neither does Florida, but California has an income tax. And depending on what type of entity you are, will dictate that tax, right? Because C corporations have a different tax rate than S corporations. So C corporations are your large companies. It can even be a smaller company, right? But it's known as a C corp. And there's an S corp. You do an S corp by electing that with the Internal Revenue Service. That's taxed at a different rate, usually, and it's taxed at the individual tax rate of that shareholder. There's LLPs, which is limited liability partnerships. A lot of those you see in attorneys, right? There's LLCs. So all of them have a different tax structure. And so they're going to be taxed at both the federal rate and the state rate differently, and depending on what state you live in. Now, that taken into account, we can always tweak that tax allocation amount of 15%. Again, remember that 15% is just an example here. You actually have to go through and work with us on what is the right allocation for you. It may not be 15%, it might only be 12%. And here's the key, as I mentioned earlier, if you got all your taxes paid, you made your quarterly payments, and I highly recommend that you sit down with your tax preparer, do those quarterly payments, as I said before. They're so important than waiting till after the end of the year to pay your taxes. If you have money left over, you can put it into your celebration fund. You can put it into your profit, your owner's pay fund, or you can leave it for next year. It really doesn't matter. But if it's uncomfortable for you, we can always figure it out what the right allocation is. Okay, I take a salary from payroll. Do I still need an owner's pay account? You can make you can make that owner's pay account your own salary. It can be for distributions if you're an S corporation or if you're an LLP, which is again a limited liability partnership. Those are called guaranteed payments. They can be for your 401k. It can be for your profit sharing plan. It can be for your pension. There's a defined benefit plan, right? In addition to a defined contribution like a 401k. So the idea for an owner's pay is that's the money that's going to go to you to reward you as the owner of the business. Okay, so I think I answered what are some of the industries NSP is working with. Thank you for that. I think I mentioned those: construction as well as personal professional services, software companies, franchises, family-owned businesses. We love a good challenge. So if you have a good challenge, throw it my way. Um, okay, I think I answered the question about the salary from payroll for the owner's pay. I answered the question about tax allocation, multiple accounts. Okay, so the next question said, you mentioned you must open multiple accounts when using Profit First. Wouldn't this be difficult to keep track of? Well, if you're using QuickBooks online, it's not that difficult. And I do get that question a lot. So if 5 is too much for you, then do 3, do 2. I recommend for construction companies or anybody that takes customer deposits, another account just for the customer deposits so they don't get commingled. And you're not getting yourself into a situation where you've spent more than what you can pay for your contractors. And if you do find it difficult keeping track of it, like I said, do 3 accounts. Do a tax account, pay account, and a regular account, and do it that way. All right. Well, I think that is all of the questions. I want to say thank you to all of you who have been here on this call. We really appreciate you. We appreciate your time. We know how valuable it is. Thank you for attending. Again, if there's anything that I can do to help you with your company, feel free to reach out to me. I give a 30-minute complimentary call or Zoom, whatever the case may be. My goal is to help you succeed as a small business owner. And with that, thank you. I hope you guys have a very lovely day and enjoy the rest of your week. Thank you. Bye-bye.